what's going on, everybody? Welcome to Al Stock Trades. How's everybody doing today? All right, guys. So this video, holy moly, guys, this video is going to have a lot of information. We're going to be talking about a lot. So this is going to be a deep dive. Okay. So for folks that don't like long videos, click off. Don't watch the video. This is going to be a long video. For folks that are serious, that want to do a deep dive, this is going to be the biggest, deepest dive that you're going to see regarding this stock. No one online is going to be talking about this company this deep, let alone if you look at Palantir, SoFi, nobody's going to talk about it this deep, right? So we're going to do a very deep analysis today, right? So sit back, relax. We're not going to go, hey, what's going on? We're just, this is going to be a very professional, just let's get down to the numbers and let's just lean. I'm going to lean back and just bring the mic down here. Let's talk, because there's a lot to talk about. There's a lot, right? Right. So, B Rob, yeah. Jesus. Oh, what's going on? How you doing, B Rad, Koopy, Stella, fella? What's going on? What's going on? New setup. It's been a minute for me catching a live. It's good. So check this out. So we have so much to talk about. So we got to get to it. We got to get to it. There's a lot, right? So, how are you? Right. And, let me know as I'm doing the live. Put your comments down. This is going to be a boring live. This is going to be a lot of stuff, right? Put your comments, your thoughts. I want to hear what you have to say. I'm going to be reading it. Again, I have a triple screen setup, so I'm able to see everything, right? So let me know, okay? Oh, you should put an Al Stock Trades decal over the road. Honestly, I should. Like, why are we advertising this, right? Why are we doing that? So we are setting up the merch channel. Well, that's going to be fun. A homeless man taught me about intrinsic value. Oh, that's going to be fun. But yeah, so without further ado, let's go ahead and get to popping. So kind of weird today, we just got a little pop, 2% pop. Don't know what that's about. So potentially it could be this article that was published today. 4 medtech stocks that gained more than 100% in 2024 with room to run. Yes, you guessed it correctly. Clover Health is mentioned here, as well as Hims and Hers. Doximity to my healthcare providers. You guys know that pretty good. ClearPoint, I've heard of them. Haven't really looked into them. But we can, just for an educational perspective, might as well. So for ClearPoint, if you go ahead and pull up the 10-year financials real quick, there's still negative free cash flow. On the quarterly basis, because that's what's important too. They're still negative. Again, not a lot negative, but the revenues are not that high for ClearPoint. For Doximity, they've been up pretty well. Free cash flow is positive, so that's pretty good. So yeah. So Doximity, again, I've heard of it before. And then Hims and Hers, we've done a due diligence on, and we've created a video. Yes. So there's that, right? And then here's Doximity. Then here's Clover Health. Looks like Clover Health's outperforming pretty much. They said that, Clover Health, physician-enabled technology company, focused on bringing healthcare access to everyone. Medicare is our next pick. Yeah, so nothing we don't know. We kind of know everything. So this is getting a lot of attention now. People are watching this. Okay. But now let's talk business. Let's talk numbers, right? So Yeah. So we're gonna talk about this, Ken. Yeah, yeah. Sometimes because I have meetings and whatnot, I don't have time to take it off. But yeah, today we didn't do it right. Al, he's making alive. He's checking the intrinsic value twice. Gonna find out who's naughty or nice. Oh, Al stock trades coming to town. Oh, that's a good one. Someone should make that a song. That's a good one. So yeah, guys, there's so much to talk about. I mean, there's a people out there. Oh man, I'm so tired today. I did a lot of research today. Um, there's a lot of people that have talked about Chimoff's SPAC and they don't want to talk. It's fine. There, there's people that ultimately have talked crap about Clover Health, and Palantir, and once the company goes ahead and gets to its intrinsic value, then of course things have changed, right? So we're going to talk about that. So what do you see here, right? You see revenue, margins, growth, net income, operating income. So this is a fiscal year basis, right? So if we were to zoom in real quick, okay, what people are looking at right now for Clover is all they see is revenue going down, right? They're like, this is a crappy company. Revenue is going down. I don't know why the stock is going up, because people don't analyze a company on a quarterly basis unless they're serious about it. So people that are like still on that SPAC train, you got to wait until it's fit. By the way, check out my cold brew. It's like milk on the bottom. It's a nice mixture. Yeah. Mm-hmm. But yeah, people are just kind of iffy on this company in terms of like it hasn't been. Let me just kind of mix up the coffee a little bit here so it can mix up a little bit, right? Yeah. So we're not really getting a lot of attention because all they see is, revenue went up and then it went down. And then, you scroll down to margins and you're like, yeah, margins improved. That's just a good tall tale sign that things are getting better. But you go to growth and that's what kind of kills it, right? Growth used to be, in terms of revenue growth, you could see it's just been crazy, right? And ultimately, I think 15 to 25% is going to be pretty conservative growth for this company. But all they see is kind of that negative growth because, again, they're just looking at it from 2023 because fiscal year 2024 has not been met. So even hedge funds, a lot of them are looking at that. Only the astute, big, smart hedge funds are catching on, like Renaissance Technology. But ultimately, net income, you do see a trend of, when Scott was the CFO, you see a nice trend of decreasing negative profitability. And then Q2 was actually profitable, which we'll talk about. But still, it doesn't look appealing. It looks like a terrible company here, right? And then operating expenses, you just see it, yes, it got better, but not, SG&A is pretty much high. And then you see cash flow, your free cash flow becoming less negative, which is good, but still negative. So ultimately, from like a 30,000 foot view, Clover Health doesn't look like a good company, right? Market cap tanking, and all of a sudden now, again, still 2023, they were analyzing this. They can see by looking at the stock. They're like, that's kind of weird. And then you see dilution, and then overall cash is going down. I mean, it went up a little bit here, but ultimately, this is what they see, right? So why are we doing this, right? Why are we talking about this, right? Because this seems pretty bearish, right? Well, obviously we're going to look at this from a quarterly perspective because, unfortunately, folks only look at it from a yearly perspective. Because let's face it, when you're looking at a company, when you look at the 10-year financial sheet, you're just looking at the yearly. You're not looking at the quarterly, right? So even us, when we do a 10-year financial analysis, it's very hard because it's like, well, it's still negative free cash flow, right? But you got to sometimes look deeper because obviously the free cash flow has changed now, and it's not going to be updated until it becomes a fiscal year 2024 when we're in like Q1 of 2025. Then we're going to start seeing a lot of movement into the company, which is coming soon. It's coming soon, a couple months, right? So So I wanted to point this out. Now, you remember December 18, stock dipped. Everyone was freaking out. Again, I'm not a financial advisor. I was just saying this is funny, right? Well, dumb money sold and smart money bought, and it's a pattern that's been repeating for a long time, right? Um, in life, you have rich people and you have poor people. I think Dave Chappelle said this. There's a difference between being broke and being poor, son, right? There's a difference. Sometimes people have a mentality. I don't know which one's which. I think broke is just not having the money. Poor is a mentality. And that's a very controversial statement because people are like, "Oh, that's very bad." But again, someone who is both broke and poor, I can attest to this. There are cultures of poor that folks understand that is taught. Just like how the language of the wealthy is transferable, not just through money, which is part of being broke. The mentality part of being poor to being wealthy, rich versus wealthy, you can think about it that way. Is like, for example, Warren Buffett's father used to be in the finance Wall Street, but also was a congressman. There are things that he taught Warren Buffett to where he found his path to Benjamin Graham and when he was 19 years old. I think he invested first in Coca-Cola when he was 13. He says he wished he invested earlier, which is, what more do you want, right? The point that I'm trying to tell you is just like how the wealthy are able to teach their children and it's passed on, being poor is also passed on as well. And looking at your family, people learn how to get credit card debt. They learn how to live above their means, not know how to save. They become they propagate what they've been taught, which is poor, the mentality. Now, you say this to the general population, and I think you would be one of the Salem witch trials. They would go ahead and they would be upset at you, right? But again, we like to talk about controversial things. Because I think once we go into an area where we're uncomfortable, we get into a point where we have growth. And a lot of people don't want to talk about that. Like, oh, I am poor. I have a poor mentality. Right. So unfortunately, you talk to these investors here or traders, gamblers, whatever you want to have them. And, they buy high and then they sell low. And then, smart money, which is in blue, smart money picks them up. And, we talked about this, right? Because you have less than $100 million, you're easily trackable by your broker because they sell that information because why not? They, have what you buy and sell, right? And then obviously if you're rich, over $100 million of net worth, SEC mandates that you have to basically file a SEC 13F filing. So, regardless, even if you teach a broke person this, who's not poor, they can become wealthy and rich. But if you try to teach a poor person who's broke, or maybe a rich person who's poor, that we're getting really deep here. It's not going to work out because it's a mentality thing, right? It's really a mentality. So now let's go ahead and let's jump to this here, Wall Street bets. We're going to get to the numbers soon. I'm trying to build a narrative here. Okay. So this gentleman posted regarding some gains, 1,000%. One of his, I think he did a call here, call option. He did a call. And you go downstairs here in the comments section, and someone said, first let's start here, but let's just go to the quick comment section real quick. Absolutely, I agree with you, B-Rob. What about the macro conditions in health sector? So that's part of the research edge. We talked about that. It's in a research edge. So it's looking pretty good, I would say. With all the overspending being exposed and government not trusting the insurance companies, this little fact makes CLOV stand out as a trusted option. We're going to be talking about that, B-Rob. Absolutely. Take advice from the people who get the results you strive for. Al's granulars of salt, granularities of salt have made the steak taste better. Now, I appreciate you, 3D Machines. And we try to. There's a lot of BS. There's a lot of BS out there, and I would just say, take a look at the individual that you're. I mean, my life is an open book. You guys can see what I am doing, and I think I've done pretty well given the short amount of time. You guys can see. You just be the judge yourself, and at the end, you have to ask. You ask yourself. Is this guy what he's teaching correct and not? And I mean, there are people that have been watching us for a long time, and they just recently got into the lifetime access, and they're like, one of them was like, actually, I've heard a couple days. They're like, man, I wish I got this earlier, right? So, sometimes it's hard. It's hard to change your perspective, and I don't blame folks because there's a lot of crap online, and the fact is, like, the argument is like, well, if this guy figured it out, then why is he even online? Well, because again, if you look at my life, I've been teaching my whole life. So if you go back to high school, I was teaching my first students, my colleagues. Not even like I was in high school too. So and if you look at the article From Homeless to Medical School, you'll see I've taught thousands of people. I've taught them in complex subjects as like organic chemistry, neurobiology, a little bit of physical chemistry, economics, finance, you name it, I've taught it, right? Only thing I didn't teach is engineering, right? Electrical engineering. I didn't teach that, right? But I've taught a lot, so going back, oh yeah, salt granulars are euphoric. Appreciate you, brother. So let's go to this comment real quick and let's zoom in. Oh, hello, wrong one. Let's zoom in here, shall we? Just so we can see it. So this person said, "What is driving the gains today? I bought a few weeks ago and have been slightly underwater. Nice to see green today, but I wonder what lit the fuse." It's an honest question, right? So and then someone said, the original poster, "You're asking the guy that bought Lumen, thinking it was Lululemon. I don't know, man." We talked about that stock too. Our stock terminal called it for sure. And then someone who's educated said, "Star ratings." And then name is taken said, "CLOV announced the SC investigation, which closed with no charges." No, it's not that, right? And then someone said, "Nope, star ratings leaked." This person is probably on our stock terminal, right? CLOV going to 3.5 to 4, Humana dropping whole point. Done. Right? Yes. You see, unable to create comment. You know why? Because Wall Street Bets, they banned me because we posted our portfolio and we posted our tremendous gains. And they went ahead and blocked us because they don't want the truth to come out. They don't like CLOV, right? So this one is a small, no offense. The guy gained a pretty humble amount, gained $2,000. Right? So in the future, this group, the truth will always be set free, and eventually people are going to figure out kind of the mega returns that are going to happen. It's going to be pretty, as B. Roberts, it's going to be pretty euphoric, right? And that's an understatement. So just going back, I can't comment, sadly. We can only watch. It is what it is. But these people, they're mods. They probably work at GameStop, right? So for folks that understand the mystery box, you'll understand what I'm saying with that comment. And then, what's going on with this? And the same guy, Toot all 83 said, star ratings leaked. And then Smokey790 said, "For the love of Pete sake, I guess, mate, where is this leaked information? I can't find anything official, and I keep seeing the wild speculation, which is about right for some Clove pump and dump games typically. So this is the narrative for Clover regarding pump and dump, and all right. So we were one of the first people to call this out. In fact, we were referenced, our group was referenced, and all we did was just look at the HTML filing code for CMS. They released it, but they just didn't hit the send button. It was in the HTML data logs, and we were able to figure that out. And we made a video, and after that video, Clover Health spiked more than $1, and we made a lot of money, right? Right. And then B-Rat Cooley was the king of the leak. Well, he wasn't like, he's not the king of the leak. He just saw it. And Jay Crazy, right? Correct me if I missed anybody. Right. But ultimately, this gentleman here went ahead and, just, no, they didn't. Downvoting, wild facts, confirm. They didn't confirm 4-star. Anyway, this guy's basically just, again, it goes back to smart money versus dumb money, right? This guy, he cannot think for himself. He has, sadly, again, I'm not trying to call someone this or that, but, great DD on their other company. So again, this gentleman, he cannot make due diligence for himself, right? To a point where he posted this right around a month ago. I mean, again, this was 3 months ago, right? And then the information regarding star ratings was released. 4 stars. It was official. Clover Health released it. We had an earnings as well. And a month ago, and then I guess someone deleted it. I think maybe the mods saw that this guy is not, or maybe he deleted it. I don't know what happened here, but comment removed by moderator. Something happened, and this ultimately got deleted. And this gentleman said, "Why are you guys stacking this stock?" And all he does is he shows max and he shows down 70%. Okay. So, it's the way I take this is, first off, this guy can't charge his phone. He has a charge of 8%. I mean, you should charge your phone, bud. And also you should get an extended charger because, you can't live life on the edge like that. Right. Okay, maybe that's your portfolio, right? Okay, I'm just kidding. But the all jokes aside, this is kind of creates a visceral response. Obviously, this guy, just from this, there's a lot of educated people on the Reddit page. A lot of them choose not to engage and talk because they're just there, right? They're there for the long run. They know how long value tends to create, right? How do I know this? Because a lot of people joined our lifetime access, and I know how smart they are because they talk on our lifetime access platform, okay? Our stock terminal and whatever, right? So that, so that's how I know, right? If you look at his second image that he posted, and again, listen, guys, we're like going slow in this live because I want to make sure we hit every subject. I don't want to mix a subject. This is gonna be a deep dive. This is gonna be a pretty good one, right? So, how do I know he's full of it? Because he literally he went on Google. What's the price target of Clover Health? I mean, come on. This guy Googles the price target of. You guys know, for all the people that started with us, you guys probably have done that before. Imagine where you came from versus where you are now, right? And not many people know how to calculate their own price target, right? Which is what our platform teaches, right? But ultimately, this is what he got. And this is where he gets his information from. I mean, this is just complete not right, right? So it's very clear that this guy can't think for himself and can't understand what a balance sheet is free cash flow. So there's a disconnect, right? And the biggest thing that I want to talk about is the fact that he looked at Max. Okay. So if we go to Clover and we zoom in real quick and let's just refresh and let's go to Max. It's down now 67%. And it was $10.20. Okay. So if you were to just kind of do a mental Monte Carlo simulation of this guy's intelligence, you would go ahead and say, well, once Clover gets back to $10, he's going to post the same thing. Why are you buying this company? Because it's been up 0% the past 5, 6 years, 7 years, right? But it's going to go back up to 10. People that think like this individual, and again, this is the same guy who posted regarding saying, this is the same guy who posted regarding, oh no, Clover Health didn't have the 4 stars, and he just couldn't just think for himself. I think once Clover goes to $15 or $20, people like him are going to hit max, and they're going to basically see Clover, let's say, is at 20 when it basically started at 10. They're going to see 100% gain, and they're like, whoa, this thing's going to the moon. And what they fail to look at is we know the value of the company. We calculated the value, and the thing in Clover approached below its value to a point where we were able to go really heavy at 62 cents to where now we're up 4-bagger all the way up to its peak, which was almost a 6-bagger. Okay. So and honestly, it was a 6-bagger because this is 435, went up to 471, right? So the point is there are different levels of people in the market. There are people that are astute, that have looked at it. Luckily, they've joined our platform, thank God. And there are people that are going to be like, oh, wow, this thing's rebounding. It's up this now. Okay, things have changed. Story has changed. This thing's going to run up even more. There's a lot of great articles. Sentiment is good. There's people that think like that, right? And then there's other people that are like, oh, let me look at the max. Oh, this thing is recovered, and it's going to go higher now because it's recovered. And they don't like to enter until it's recovered. And this is what I like to look at. People that, like, for example, about Palantir, they look at the max. It went up, then it went down. It went down 80, 82%. It went down like 80% plus. And then once it recovered, and they're like, people are like, oh my God, it finally recovered. Because it used to trade at $35. And then from like 35 to now it's up another 125%. So they're going to push it up higher. Right. So you see those two different types of people, or three, right? So this is kind of the situation here, right? So there's people that just think like that, right? So there's going to be different levels of buyers in the market. And for us, and for me, I like to see myself as an intelligent investor. I'm going to be able to sell to the optimist, right? But buy from the pessimist, right? Which is what we did. There are people out there that have sold their Clover at 60 cents, and I bought it from you. Thank you. I mean, it's people like you that make, thank you. I mean, it's people like you that make the world go around. I appreciate you, right? You've changed my life. You changed the lives of the people in the stock terminal. Thank you. You deserve the world, right? Thank you for giving me the world, right? Sorry that you were fearful. I was greedy. What can I say, right? But when you become greedy, I will become fearful, and I will sell it back to you, right? And then the roles will, we'll just play this game. I hope what I'm saying is painting this picture, right? And point out that we've been talking for 31 minutes, and we haven't even gotten to the numbers yet. Okay. Right. And again, driver, are we going to go to the moon? I love the sentiment. This video is going to be more of a deep dive. We're going to go beyond that approach, right? JKJ, right? So, yeah, we're going to be talking about that, right? Yes, sir. How you doing? Teach me graph. What's up, Coach Brian? What's going on? I'm an optimist. Well, certainly I am now when it's low, but usually that's when people are pessimists, right? So now that we went ahead and talked about Smokey and smoked his post, right? Now let's go ahead and talk about this here. Now we're going to get to the numbers, okay? Now this is going to require me to shift positions and just talk here. This is a lot of information, okay? So let's go ahead and see if we can make this a little bigger. Nah, can't see it. Let's go like this. So let me just take a little drink of coffee. Give this video a like, please, because this takes a lot of work. And for folks, we have our New Year special. Take advantage. If you want to join a group of millionaires, join our platform. If you want a place that shows you how Wall Street works, join our platform. Our platform will take you from zero to hero, right? It's changed my life, and you could go ahead and talk to the many others that its lives have changed. And we say this from the most humbling way. So, just so we can reorientate ourselves, LQ stands for last quarter. LQ1 stands for 1 quarter before last quarter, 2 quarters before last quarter. So, it's like 3 months, right? So this is the price of the stock. You could see it's $3, $3.21, $170, $2.14, $3.55, $3.72, $7.39, $13. Back in the day, you remember how I went up to $16.77? What I want to show you is just this analysis. You can see how it went from, especially from the gross margin side, which looks at net margins, FC, free cash flow margins. It went from red to green. That is really good, right? Because this is the most recent, right? So you can see there's a lot of red to green, right? But if you look at now just price, the stock price to the book value per share, it's at $4.60. Before it was at $2.55, but there was a point where it was at negative 91 cents. This is when Clover was really down, right? Then it started doing its downward trajectory. But look back when it was around LQ6, when we were around $19 or $20, right? So what we're doing is you're starting to see it's rebounding towards the upside, right? Let me just show you. It's rebounding towards the upside here, right? Here's the 19, here's the 20. So you're starting to see a rebound. If you go to price per free cash flow per share, it's 26, right? It's slowly rebounding 40, 18, 26, because before it was negative. Before it was negative 94. Back here, it was even, let's say here, it was positive 79. And that was when the stock price was $16.77. So based off of this trajectory, we could go ahead and say, well, we could find the ratio. We could say, well, okay, well, the price was 16, free cash flow was 7. So we could say, you can ultimately find the ratio. I think that's a waste of time. But you can ultimately see, like, okay, here's the ratio. Here's the price of the stock. This is the difference in ratio, difference in price. Then you can go ahead and ultimately figure out kind of what was the overall division factor. And then you can say, okay, well, this thing's going to start going back up. Because ideally, if this ends up going to, $80, then potentially this will go to $16 again, right? Based off of historic numbers. Again, doesn't necessarily work like that, but that's kind of like the overall average point here, right? So the point that I'm trying to make here is the only thing bad here is the revenue. The revenue is red because the revenue's been going down. but they're about to turn on their growth phase. I don't care so much about the vending revenue because look at the gross profits. They went from red to being green. That's all that matters to me. Look at the free cash flow. They went from red to green. Okay. So ultimately, we are headed in a direction that we haven't seen before for Clover Health. We haven't seen this before. This is new. Okay. This is new. So now what we're going to do is we're going to go ahead and we're going to look at the overall trend from the quarterly perspective. To do this, we're going to have to go ahead and just open up the help menu from our brain machine. Go to stock fundamentals, click that button. Again, it's all part of the stock terminal. You want lifetime access, use the new year coupon code link down below, alstocktrades.com. And then you'll be able to join one-time payment, lifetime access. You live in Canada, United States, you get access to a firm. Check it out, right? And international folks, PayPal, depending on your credit score, right? We try to be all inclusive, right? We're going to hit the quarterly here. We're going to hit CLOV and we should get it instantaneously, right? So there it is. We're going to go ahead and download it. We're going to open it up on the computer. We're going to make it bigger. And you can see your company achieved 4 stars for its PPO plan, indicating improved quality of care and potential for higher CMS reimbursement by 5% for the gross margin specifically. We can state facts after facts of why Clover value is not yet factored in when you consider forward-thinking models. Absolutely. So let's go ahead and let's just create a worksheet here. Okay. Let's just open this up here and let's kind of paste this here. Let's go to EPS here and let's just kind of copy EPS. And let's go to, let me think. Give me a moment. Let's go to balance sheet real quick. And let's go to total stockholders' equity. We'll do that. Whoops, sorry. We'll put that there. In fact, here, we'll put this here. Because this requires a new date. Because it's from the balance sheet. So there's that. What else do we need? So that's good. Let's go ahead and let's also look at net income. Again, all part of our stock terminal from a quarterly basis. Let's put net income here. Let's go ahead and let's cut this and let's just kind of give us some space. I like space. Let's cut this here and let's put this here. Let's bring the dates here, copy, put it here. Okay. Yeah. What I'm doing is I'm graphing this. I'm graphing this so we could go ahead and we can create a picture, right? And as I'm doing this, we're having people coming in because we're about to point out something huge that people don't want to see. And people, again, don't want you to know this. It's funny how the crazies come out, right? I don't know, right? So now let's go ahead and let's go to free cash flow. Right? Free money, right? B-Rob, I love you, man. The internet, right? But it just shows you, why all of a sudden now they're saying this. Because we're getting to the point. We're getting to the point why we're going to make our money. Watch and learn. Okay. All right. So that's why we made this channel, right? That's why we made this channel. And it's just interesting here. Check this out. So you guys can see this. As soon as I got to the numbers, I just got this message from Twitter. We're still live on YouTube, so that's good. But if you go here, it says, we're having trouble streaming at X. This may be an issue on X's end. We'll keep trying. That's kind of weird. We're getting to the numbers. We're getting to are you watching this, guys? We're getting to the numbers and some weird crap is happening. What does that tell you? Okay. This is again, there are people in this world that don't want you to make money. Okay. And I'm trying to show you how this works. Okay. So let's go ahead and let's get to work while we still have a chance. So we'll go here, we'll cut or copy. We'll put the dates here. This is for free cash flow. And we'll take the free cash flow here. And we'll put free cash flow. And then for just our understanding, let's look at net cash provided from operating activities. We'll do this. We'll put that there. Actually, we'll put this here, and then we'll just carry over the date. So now what I'm going to do is I'm just going to just increase the sizes here. Yeah, coincidences are very rare. I agree. Exactly. Hey, you guys see it. You guys see it. You know, this is not again, just let me take a quick tangent real quick, because I'm sure that's what they want, right? Let me just take a quick tangent, because this was on the docket. I wanted to talk to you guys about this. So the world that we live in is not fair. Okay. There's a video by a prominent YouTuber posted this, exposing the honey influencer scam. It had about 5 million views. I hope you've seen it. If you haven't, you should see it later after this video. And it shows honey for, imagine Al would work for the other side. Oh yeah, you don't want me. Yeah. You guys don't want me pinned against you. I can tell you that. Right? Woo! Right? So maybe in the other metaverse, right? But listen. Honey is an app where it helps you save money, right? Right? So Honey was an app that saves you money when you look for coupon codes. What they ended up doing, these people? When someone has an affiliate link, again, I wasn't affected by this, but just because you're not affected by something doesn't mean, right? So ultimately, just so this guy said 50 people watching, nobody. Yeah, right. He called me again. He wants to distract us from the numbers. We had about 100 people watching, so maybe there's ways where people there's ways people complain and they end up removing the video. It's that's just how people are, right? And it's unfortunate, right? So when someone has an affiliate marketing, what they do is they get like 10% or something like that, right, for selling the product, if not more. What Honey did is, as soon as you click the button, it removed the affiliated marketing from the person to where they got the affiliated credit. Just watch the video. So what I'm trying to tell you is, and PayPal bought them for $4 billion. So the point that I'm trying to tell you is that even at the most coupon-orientated end result of a checkout, it's almost like you're inside of a store and the guy who sold you the TV would get a commission, but someone at the beginning of the checkout inside the store says, hey, I have some coupons. You want to see if we can save you some money? And let's say if they didn't save you any money, they would switch out the referral and refer themselves. That doesn't sound right, right? What I'm trying to tell you is, if you were to become a master in any sector that you're in, you're going to find a group of people that are very animalistic, that will try to take as much money as possible, and that will try to manipulate the market. And I would say that in terms of investing, I'm in the top 50%. And again, that's me being humble. I'm not saying I'm in the top 10%, right? I wouldn't even know what top 5% looked like, because there are things within the dark pool, synthetic shares. There are things that I don't know, because I'm not Citadel. I didn't create the system. I'm not an insider, right? I'm an outsider just like you, happen to master the craft for fundamental analysis that I'm sharing with you guys, right? So uh, uh, ultimately, that's I wanted to share this with you guys, right? So even when it comes to something as innocent as just a free add-on to a Chrome browser, you can see how disgusting people get for trying to make money, right? So uh, let's go back to the quarterly review here, and let's just fix this up so we could do our analysis, right? And you say you're invested, but then you go ahead and you insult B-Rob, right? And it doesn't make sense, right? So again, just people, it's very weird, right? The more you learn, the less you know comes to mind. Absolutely, absolutely, right? Absolutely. I'm gonna go ahead and fix this. Just make sure things are pretty good here. Make them look good. So let's zoom in a little bit here so we can just kind of make it a little better here, okay? And then we can just fix it. Again, it's going to be a boring live because there's a lot of information we're going to sift through here. So there it is. So this is net cash provided from operating. So we'll just say operating cash from operating activities. So we'll go ahead and do that. We'll go ahead and just bold these out. Okay. So then there's this. And then let's go ahead and just Q4, Q3, Q2, Q1. Again, we're just fixing it so we can see the general trend here, right? I've already done this. I'm doing this for you guys, right? So we'll go ahead in here. Like, I didn't do it for these specific numbers, the new numbers, but I've been doing this. You guys seen it in past lives, right? So we could just kind of grow this out a little bit here. So again, the whole point is just cleaning it up. We're trying to clean it up. Right, this goes back to 2019 for their S filing. I believe it was the S1. So let's go ahead and bold this. Okay. Bold this. Then we're going to go ahead and bold this guy here. Okay. This is going to turn into $. Dollars there. We're going to convert this to dollars. Oh, wait a minute. This needs to be converted to dollars. And then this, where the number signs are, we're going to have to make them a little bigger here. So you could see why it takes time to make money. I mean, due diligence takes time, right? And this is a nice way of just showing kind of how long this takes. I usually do this by myself. Just kind of have music running in the background. I usually listen to some hip hop or something. And then we just go ahead and do this, right? Go ahead and put this here. Right. And then go ahead. We just push this here. Okay, good. So we need to change all these to numbers as well. So we're going to go, and again, This is 2024 and that's 2019. So you're kind of reading it backwards. We'll end up fixing it in the graph. Okay, guys. So we'll hit the numbers here. And again, you got to fix it here so we can see the data, right? Okay. Yeah, it's kind of, again, this is really boring, you know what I mean? Really boring, but again, you really this is kind of this is what it takes. This is what it takes. This is what they don't want you to do, right? This is what it takes. This stuff takes time. Okay. Right? No one wants to put the numbers, right? And I'll explain to you sometimes the numbers. Sometimes, people look at the numbers and there's stuff that's not in the numbers. SaaS is not in the numbers. Revenue growth for next year is not in the numbers. We're going to be talking about that. Remind me to talk about revenue growth for next year. Please remind me so I don't forget. Put in the comment section if you can. Please remind. I'll do it right now. Do not forget. Just for me, I put it in here so I remember. Okay, so now that we went ahead and did this, now we're going to graph it. Okay, we can see this table, and what we can do is we could just open up open up the terminal real quick, and then just no, that's silly. We'll have it like this. This is enough. Okay. And then let's go ahead and Rockabye said, check yourself. You came here to learn from someone who knows the game in and out and has way more knowledge about the market and the ins than you do. Don't be disrespectful. And I appreciate I appreciate you, Rockabye. I honestly don't know what a goober means. I'm going to go ahead and Google what goober is. I looked it up and I see this chocolate. Maybe this is goobers, a goober, a peanut, a foolish person. Yeah, you come in to this platform. We're offering free research, and you go ahead and you insult somebody that's providing an analysis the day before Christmas Eve. Someone who came from homelessness to turning his life around and helping people change their lives. It really says a lot about you. So I really feel sorry for you. I truly do, and I hope Marcus Aurelius said this in his book Meditations. You find people that are lost, and I really feel sorry for you. And I just hope you find the dignity to respect yourself. Because honestly, I mean, for folks that disrespect others, they have a hard time respecting themselves. So, right. Dude, you need to get, it is what it is. Right. So going back, because, we're here to make money. Right. So let's go ahead and just graph this. So first let's graph EPS. All we do is, you just go ahead and do this, right? Go ahead and put a line chart and go and do this, and right, make it big. We like it big. Do this because it's easier to see, in my opinion. And then go in and hit axis and reverse the axis. Huh. That's weird. It's supposed to reverse the axis point. There's a way to do it. I think it's just updated here. Axis type. Huh. Let's see. Okay. Let's just make it a little. bigger here. Yeah. So you could see this is 2024. You could see it's going up. But again, guys, I don't like I want to reverse it. There's a way to do it. That's why I straightened it out. There's a way to do this. I'm gonna have to I think it's sort. Is it sort? Custom sort? And I think it's from I think it's from Z to A. Hmm. No. Let me see. Yeah. For folks that are on the live, remind me how to do this. Let's see. Zor. Hmm. No. Hmm. Hold on. All right, hold on. Let me see if I can. There's a way to swap things out here. It's just it's kind of. And let me make sure I didn't change the numbers here because that'll be stupid. Okay, good. We're still negative here. Ideally, this should have been swapped. So let me just go ahead and one moment. Again, this takes time, right? So how to swap how to swap Excel spreadsheet, format numbers, how to not swap, how to reverse, maybe reverse. So yeah, I think I was doing it right. So you go, let me say, on a Mac, select the range of numbers you want to reverse data sort. So we go here and we go data. You see, I thought it was something with sort. Maybe smallest to largest? No. It's somewhere here. No, that's not it. Custom. Could it be like this? No. Well, I guess we're just gonna have to read it from right to left, which is kind of counterintuitive from the English language here. But I'm gonna try a little bit, and then I'm just gonna give up, and we're just gonna go ahead and read it how we do it. Just select the date row. Oh, you see, you have to select one row at a time. You know, that sounds uh no, it doesn't seem to do that. Here, let me open up a let's 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 watch this video and let's see if we can figure this out. Ready? This guy seems like he knows what he's talking about. Let's watch this video. Let's see. That's what I thought. I thought it was a sword. Yeah, that's what I did. I swear to God, that's what I did. So we're just gonna we'll just do it one more time and then that's it. We're done. All right, no more. No more time wasting. So we're gonna go here. We go to sort. Uh aha. No, it was supposed to. Column. No, I know. Yeah. Well, I mean, I just needed to. It's okay. I mean, found it. Left to right. Got it. Boom, shakalaka. But the problem is we need to also sort the number too. So this is fine. So there it is. So there's a sort. We go sort. I remember now. We go here. We go options, and we go from left to right. No. We go from because it's already selected. We go from there's a hold on. Sorry about that, guys. Had to talk to my dogs. Okay. So now that we realize the EPS, that's why I tried it just on the EPS because it's on this page. Let me go ahead and just kind of cut this off here. And let me just repaste this EPS. Let me repaste this here. Okay. Good. Okay. Let's now sort this. Now that we kind of have the numbers here, let's go ahead and sort this through. Because we sorted the date, but we need to sort the number. So sort. So it is left to right, but then we can go so for some reason this is not yeah, both of them need to be sorted. So we'll go ahead and let's see if we can do it together for this one. Sort from Z to A, left to right. Missing column erroneous. Yeah, you know what, guys? Screw this. We're gonna go ahead and just I gotta figure this out on my own time. Sorry about that, guys. I don't want to. So we'll just reverse. We'll just bring this back up here. I just wanted it to make it look easy for you guys. But unfortunately, wait a minute. It reversed. Yeah. What the hell? Okay, whatever. I guess it did. It ended up reversing. You see, now this is reversed. What in the world? What? Okay. Let's see. All right. That's fine. I give up. So you guys are going to have to bear with me in terms of looking at it from left to right. I know it's not going to be as sexy, but we've done it before. There was a recent edit on Excel. It used to work like this, but it's fine. So we're going to put this here, paste it, and we're going to go ahead and just delete this here. And we're going to go ahead and take this EPS here. And we're going to go here and we're going to put this here. Now, this is the first graph. So let's go ahead and take a look at the first graph. So we can go ahead and we can do an analysis here. We can run an analysis. Yeah, this all looks different. You can run an analysis by adding a trend line, and from that trend line, you can pair it up with the stock price. So we'll put a trend line here. Now, ideally, I like to read this trend line a little bit, in from the right to left and whatnot. But it's fine. We could go ahead and read it that way. Okay. Sorry, guys. Okay, so that's fine. But you can ultimately see we went from a negative EPS to positive. From that Q2 was a positive number. You can see like this is the first time it's done that, right? In fact, if you were to just look at it and draw another graph and insert another graph here and open up here, you can ultimately see that there's been, this is a shorter time frame. You can ultimately see this is 2024, right? You can see we went from negative to positive. So overall, this company now is becoming profitable on a gap adjusted basis, right? So this is pretty huge, right? This is a EPS short term or just short frame, right? So ultimately, it used to be negative and now it's positive. Obviously, it's going to keep oscillating, but there's a trend line there, right? And you can add the trend line and you can see it's hard to do it in terms of people looking at it from historic quarterly, but you can see the trend line is getting up there, right? Okay. So now we could go ahead. Now we have to look at free cash flow. Now, ideally, what I would like to do is I just want this thing to freaking work in terms of sorting it. So like I just don't get why it doesn't work. Like this is just ridiculous. Because we have to sort it. One of the options was saying sort it, reverse it from by itself, which is what we did. But it doesn't say A to Z or anything like that. Could it be because it's in number form? We would have to change it from not a number just to a decimal. Because I think that's ridiculous, but yeah, you see, this is just ridiculous. Yeah, it's ridiculous. This is ridiculous. This is, yeah. So Excel changed. Excel sadly changed. It updated, so I have to figure out what this new update is, which is fine. So let me just make sure. I'm just gonna go ahead and grab a new net income because I'm just really anal when it comes to this type of stuff. So I'll figure this out, and then we'll release it in the Research Edge for those proper graphs. I just wanted to have these graphs ready so I can drop them in the Research Edge. But it's fine. We'll just do it in reverse. It's fine. So here's the graph for net income, which is pretty much the same thing as EPS, right? Earnings per share. It just doesn't have the share part of it. So let's go ahead and draw a graph here. And you can basically see from a long-term perspective, this, it's hard to tell. This was really negative, right? And then it went back to being positive. So it's hard to tell. So you would have to, let's just kind of put this here. You would have to ultimately take a shorter end of it. So if we were to just take the last couple of quarters, and let's say I want to look at net income, let's say from from Q2 to Q2 of, we'll add this, I think this is maybe this much is pretty good. Illustrates the point. This is net income. So you can see, let me just make sure you can see again, this is from 2022 to 2024. You can see the net income is going where? Again, 2024 is to the left, right? So it goes from new to old. So you can see one from negative to positive, right? And if you were to graph a trend line, are you guys seeing this here? If we were to graph a trend line, you can see that we're going from negative to positive net income. Now, again, Q2 was positive. Q3 was negative, right? So this is quarterly. This is not a fiscal year, right? But ultimately, you see the trend. We go up, then we go down. We go up, then we're going to go down, right? Because you look at, so you have to analyze from Q2 to Q2. From Q2 to last year's Q2, we really increased, right? So let me explain. So if we go here, and if we go to Q2 here, and let's go ahead and highlight this here, which is in yellow, and highlight this here, highlight here. And let's turn all of these in numbers, please. Let's go ahead and make all these in numbers. Okay. You could see that we went from negative $28 million to positive 7.4 million, right? You could just zoom in here, right? You could see how we are heading towards a profitable company, right? And again, it's still choppy because Q3 was actually negative, right? So Q3 of 2024 is negative, right? But ultimately, in the long run, if this trend continues, we're going to get to that profitability metric, which is maybe 2025. So that's what Sandro is saying. I think it's going to be 2026, 2027, right? But this is kind of an income. So now let's go to my favorite. Let's go to free cash flow. Okay. So if we go to free cash flow, okay, and again, we have to read this from right to left, not left to right. New update from Excel, sadly. Okay. So let's just first look at stockholders' equity first, since we have it here. This is how you calculate book value per share. So you can see stockholders' equity. We go here. We add a trend line, make it logarithmic here. You can see it's you can't really tell, right? It's too much, right? There's not. So you have to do what we did earlier. Just look at a few quarters. So we go back here, and we can just kind of go from here, let's say, to here. This is pretty good, right? We'll go insert. Let's make a chart. And let's go ahead and make this. So what you're seeing is we went down and then we started going up. So we're in a positive momentum now because we've gotten to a point where we just became positive here. You could see the trend line broke, which meaning now the company is adding value to its shareholders. So if you were to calculate book value is starting to go back up. Okay. So this is, we can just go ahead and just put this here. Okay. Put this here. Okay. There. Now let's go to my favorite. Let's go to free cash flow, because free cash flow is pretty significant. So now let's go, because this is why we're making these, right? So we go to free cash flow, and then we go in, we do this, and then we make it bigger. Okay. So you can see we had negative swings in free cash flow, and now we're going up. Okay. So again, it's erratic. So when people are doing this, they're like, I don't get, like, again, we're reading from left to right here, right? This is 2024, this is 2019. So you can see how it looks erratic. So let's clean up the data, since we use our intrinsic value calculation for this. Okay. So now that we looked at this and we looked at erratic, we can go ahead and do a couple things. We could look at the most recent ones, which is around here, and we can graph that. Since we did it for the other ones, let's go ahead and continue the analysis. You can see it still looks erratic, right? It's messy. Sometimes they're free cash flow positive and they're negative, and then it's messy, right? It's a messy, hessy. So how can we clean the data? Well, let's go ahead and clean it. Okay. So now let's just go ahead and same thing with operational, right? Let's just cut. Mhm. Let's just bring this down here. Let's just kind of give us some space. We need space. So we're gonna add a Q3 here because Q3 is not published here. If we were to add a Q3, give me a moment. Let me just get you what Q3 is. Mhm. We've calculated it. We showed it on a video in the past when I was traveling. Give me a moment. So let me just kind of take a little screenshot here so we can show you. So Q3 is here, which is 49, right? We got 25, 44, and 49. So here's your 25, here's your 44. Sorry, here's your 25, here's your 44. So that's the the issue here, right? So we're gonna add Q3. So let's put let's just put Q3 here. So for Q3, we got 49 million. Okay, so 49. So let's add it. 49 0 0 0 0 0 0. Okay, let's turn it into a dollar. Okay, so now let's just grab these. Okay, and let's just kind of clean up the data. Let's how about this? Let's insert a column and let's look at this and put this here and put 2024 here. Let's put that there and let's call it a day. Okay. So now we're going to highlight this yellow for this year. Okay. So we're going to title this year. How you doing? What's going on? What's going on? So this year, let's add up how much free cash flow. So what you won't even say it this year. Let's just 2024, and it's still, we're going to say pending because we still have Q4. Okay. We're going to go ahead and take the sum, right? And we're going to sum this out. So we got 118 million of free cash flow for 2024. This is what they don't want you to see. Okay. Then we're going to look at the fiscal, because again, like I told you, in the first tab we talked about, they're only looking at 2023. They have not calculated 2024, especially for free cash flow. They have not looked at it yet. And that's a big mistake. By the time it happens, it's already too late. Stock price will be $4, $5, $6. Okay. So for 2023, let's go ahead and look at the sum. We'll say equals sum. Well, first off, before we do that, let's highlight the 2023. I don't know, in like a light blue. Does that look good? Yeah. Let's go and take a sum. And let's go ahead and add all this. See how that's negative? It's negative 116 mil. Okay. Now let's go ahead and look at 2022 and let's highlight that and let's turn that into a light green. No, that's a deceitful color. How about this? Let's turn this into a green because it is green. And let's turn this into a yellow, like that. And let's take 2022 and let's equal sum. And let's go ahead and do this. Right. As you can see, I'm spending more time on the free cash flow. See how it's negative? And now let's see how many quarters we got for 2021. Good. We got the full stack. So let's pick a brown, right? So now let's type in 2021. This will be the last one. We'll equal sum. Okay. As I said, this is a boring video, guys. This is a lot of stuff here. Okay. We'll go ahead here. And we will hit this and we'll hit enter. So then now, I'm going to try this again. If it doesn't work, I'm going to be very upset. It's fine. We'll just. Weird. Let's see if we sort the, because listen, if we sort this, it works. You see how it switched? You see how it switched? It worked, right? Which is just complete weirdness. But then if we go ahead and sort this, let's see if this works. Now you see how the numbers are all weird. So you know what? We're just gonna recap just to prove the point. We're gonna calculate this again, but put it in order because I think this is the most important thing of this year, right? For Clover, okay? We'll just recalculate. I'm gonna do it quickly now since I already showed you how I did it. I'm not gonna go like teacher mode. Okay. All right. So there it is. And this is the free cash flow. Okay. But this is updated. So let's go ahead now and let's graph this so we can see what we're seeing here. Okay. Let's insert. Let's put a graph. And let's put free cash flow. Okay. What we can do is we'll fix it up even better so we can just label it so it looks a little sexier. We'll make it big so we can prove the point and we can say free cash flow. Okay. All right, ladies and gentlemen. Let's zoom out and let's make this big. Okay. We'll push this here. Okay. We will increase the size. Okay. We'll go ahead and bold this, increase the size. Okay. We can add a trend line. Okay. You can see we just crossed something. There's been a cross. Logarithmic, make it a little better. You can see it better. But forget the cross. We can figure this out. Okay. I'm going to copy this real quick. We're going to open it up in a different way. Give me a moment. Give me a moment so we can see this from a perspective of an education. So we can see this here and let's look at this. Okay. Okay. All right. I've made tons of profit with and now I can reload to Clove. What is a good entry? Yeah, so we will talk about that again. Not financial advice. My guy still at it on Christmas week. Love to see it. I appreciate you, Jacob. All right, so, what are you seeing here? Like, what are you seeing? Okay, we're not really gonna do operation. I mean, we kind of can in a way, but operational free cash flow. I don't really see. Yeah, we're not going to do it, right? We're just going to focus on free cash flow. What do we see here? Okay. The parentheses is negative. Okay. 2021 was negative. 2022 was negative. 2023 was negative, but we can see the trend line. You see how originally when I said the data was nasty, if we go ahead and look at the data from a free cash flow here, it's nasty. It's erratic. It's erratic. Okay. What's going to end up happening now is when we clean it up, and we potentially, we don't know this, but I said pending, maybe Q4 will be negative. I don't know. That's why I'm kind of like cautiously optimistic. But based off of what I'm seeing here, we just crossed from negative to positive free cash flow almost on a yearly basis. So what that means is, I'm just going to say it in just the most easiest language. All you guys that are watching right now, you guys are about to make like a lot of money. Okay. A lot of money is about to be made. Okay. A seismic amount of money is about to be made. Okay. Again, long video. Okay. We're doing a lot of things here because we're putting everything together here. Okay. This, what you see here, is what I've been waiting for. I've been waiting for this moment. Okay. I have been waiting for this. Because once you have free cash flow, then people are going to start putting into the intrinsic value calculation. Then you're going to get institutional investors come in. Once we get to profitability, which we have not yet, we're still not yet profitable. We will need time. We are EBITDA profitable. We're getting there. Sandra says next year, I think it's going to be 2026, 2027. If it comes earlier, that is amazing. I'm just being a little conservative. That's all. So this is what you want to see. From this is what you want to see. This is what's happening. This is why, to answer this gentleman's question, why are you guys stacking the stock? Clearly, just we're stacking it. Well, because, where did I put the information from? We have so much to talk about, guys. We haven't even scratched the surface. We have so much to talk about. Okay. We're talking about it because, just look at this graph. You see, if you can break things down to their stupid, simple mechanisms, you're able to see this is a big deal. So why? So the question now is, why is this a big deal? So we got 118 mil of free cash flow, technically 118.8. We'll call it 118 mil. Okay. So we will park that idea there. And now let's go ahead and let's move to the next slide. So this here is a big table that looks at United Healthcare, ELV Health, Cigna, CVS, Humana, Centene, and Clover. Okay. The market cap for United Healthcare is $465 billion. ELV Health, $85 billion. Cigna, $77 billion. CVS, $55 billion. Humana, $30 billion. Centene, $30 billion. Clover Health, $1.6 billion, a measly 1.6. And before it was only 400 million. So why am I talking about this? Well, a lot of people are saying, Al, I don't know why you always talk about 60 cents. Well, because it happened this year. Percent from year low, we're up 430%. Okay. Now let's go to these two ratios. We went ahead and did a CLOV to big dog ratio. What is that? Well, we took the market cap of United Healthcare, and then divided it by the market cap of Clover. We got 288. We did that for all these other health companies. And then we went ahead and we took the average. If Clover was to become the average market cap of all these companies, we should see a stock price of $247. Okay. But then I understand United Healthcare is pretty out there, right? Because like all these are 85, 77, 55, $30 billion. And United Healthcare is like 465 billion. So I said, well, you know what? United Healthcare is like its own little beast. So let's go ahead and let's exclude United Healthcare. And we got a price of $111.24. And we've gotten price targets like this to around $120 back in the day. So you know, and then let me just kind of recall something very important. So if we just open up Twitter real quickly, or X, whatever the hell you want to call it, right? And we open up CLOV here. And someone posted this. I just have to find it. It's a really, really good comment. I have to find it. Yes. So shout out to this gentleman here. He said, this stock is still steeper than potential 100x. Good. I agree. All right. So Vivek said this. Vivek, the founder and executive chairman of the board. He said, in 10 years, I strongly believe that it is possible for Clover to have made the biggest positive impact in healthcare, which you already start seeing the HEDIAC score, which is the highest industry-leading MCR. Just put that to the side. The second thing is, while simultaneously accruing the largest market value in healthcare, in excess of any healthcare company that exists today. So this is nice, but we're in the business realm right now. The biggest thing here is, while simultaneously accruing the largest market value in healthcare. What does that mean? If we exclude United Healthcare, which according to Vivek, he thinks that he could knock on United Healthcare's door, we could get to $247 for Clover Health. But if you go from, United, if you exclude United Healthcare, we have the potential of getting to $111 in the next 10 years. I know that sounds crazy, but if you look at the average market caps of these companies, Humana and all of them, they used to be 60 Humana, right? That could be Clover's potential. Now, let me go back. Let me go back. Okay. Let me go back to that $6 price target that gentleman posted. Okay, because he said some things that are important. Very, very important. He says, so he initiates a $6 price target. He says, with a better star rating and a key competitor stumbling, let's focus on this. I'm going to say this 3 times. A key competitor stumbling. A key competitor stumbling. I'm going to say it one more time. A key competitor stumbling. Now, what does he mean by competitor? Which competitor is he talking about? The answer to this question is Humana. Humana is down 45.6%, where people on CNBC don't even want to talk to Steve West anymore. We'll play that video later, so you can see how bad that is, right? This is a stumble. Right? This is, if you were to buy Humana 5 years ago, you would be down 31%. This is a stumble. This is a significant drop. And now it's only a $30 billion market cap, which you can see here in our research. Humana, right here, $30 billion market cap. It used to be 50, 60 billion. So if we were to take the average excluding Humana, United Healthcare, we would get 111. Now, Vivek, he says, while simultaneously accruing the largest market value in healthcare, that is crazy. That is crazy, because if this is the case, then potentially we could go higher than $200, which is insane. And again, very speculative, right? But what I do know is that this is the market value so far of these other businesses. And Clover is only at 1.6 billion. Do you understand the opportunity that is here? Why do you think I have over 750 videos and put my reputation on the line? You understand what's happening here? You understand the vision that I'm seeing? Are you seeing it? Why am I spending an hour and a half here on Christmas week? Am I stupid? This thing has the potential of creating generational wealth. Generational, not financial advice. You do it yourself. Take me as a grain of salt. Okay. We are still so early. So early. Right? Exactly. About $30 billion would be a $60 stock price. Just letting you know for Clover, right? That's weird. Yeah. So there's that. So now let's talk market breadth. So last week, one of our members, Dish, said, the market breadth, which means the number of stocks that are above their, 50-day moving average, it's fallen down dramatically. Only the Magnificent Seven are really doing well. It sounds really bearish, right? But again, sometimes you have to dig deeper in order to look, you have to look under the hood. So every time where you have when you're down to the 50-day moving average, you can see the stocks tend to rebound, because again, it's almost like the call put. When everyone's so bearish, that's when you want to buy. The question is, this is from 2020. It's only 5 years here. So we conducted an analysis and we found approximately 43 data points. And this is the data points here. From all the way from 1998 to the inception of the market breadth analysis for the 50-day moving average. And we found that, yes, this tends to be positive, especially from the yearly basis. Again, you can only look at this as a one section. You also have to look at the other outlooks that we have. But I just find this interesting because, this goes back to kind of how we do things. Once people are scared and they're bearish, that's when we eat. That is when we eat, is when other people are bearish. That is when we are hungry, ladies and gentlemen. That's when I like to eat. Okay. So that's that. Right. Another thing I want to talk about. This is a Nature article that was published. Nature, for all my scientists, you already know. Nature is a pretty reputable article. To get into Nature is any scientist's dream, any doctor's dream. Nature is such a strong, I don't have any Nature papers. That's hard to get. It is hard to get in there. Anywho, the reason why I say this is they posted, this was talking about the complete blood count. Now, historically, complete blood count, you just look at it and you see someone has anemia or whatever, or someone has hemoglobin below 7, you transfuse. We look at it from the terms of anemia and some other things that maybe, other specialties, like oncology look at, right? But ultimately, if you were to look at it, this paper talked about, so I'm going to just read this to you because it's easier. So this paper is fascinating because it challenges the traditional approach to how we interpret blood tests like CBC. So in medical school, we're taught to use CBC for specific purposes, but this paper explores its broader implication, including connection to diseases like type 2 diabetes and atrial fibrillation, right? And all-cause mortality. So to all the doctors in the room, have you ever used a CBC for AFib? No, we use an EKG for AFib. Have you ever used it for type 2 diabetes? No, we use glucose and A1C. What? Right? So again, the point here is you're looking at this Nature paper. It talks about how you can predict diseases earlier. And this aligns back to what Clover was saying. And I think it's one of the Pennsylvania institutions for college regarding finding the diseases earlier before they come. Like, for example, Andrew Toy has Marfan syndrome. He publicly announced this. Unfortunately, his father, he figured it out because he had like an abdominal aorta aneurysm, I believe. And then that's how he was, essentially his dad saved his life. And that's not how it should, that's not because he died, right? That's not how healthcare should be like, right? So his mission, and he has a strong mission, and I think he's accomplishing his mission. And I'm just so honored that I know him, right? Just a fabulous man. So he, it's about catching diseases earlier, right? And if you're telling me there's like hidden gems within these CBCs that we don't know about, and the fact that he is the only CEO that's a computer programmer, computer scientist for in the healthcare industry, you have to ask yourself some questions, right? I do research in neurogenomics. Recently a PhD from ARK Invest highlighted how there's a lot of funding to genomic technologies and blood-based algorithms. In fact, we're starting to see that even in my realm of research. So you have to ask yourself, so which healthcare company is positioned to handle this? Is it Humana, which is struggling with outdated systems of siloed healthcare models that has left them down approximately 50% in value? Or the United Healthcare $500 billion giant that's relying on an AI model that has a 90% plus denial rate? I personally believe it's Clover Health, which stands out as the only insurance company that is led by a computer scientist. They're uniquely positioned to capture the opportunities of the fourth industrial revolution in healthcare. Their innovative infrastructure and forward-thinking AI capabilities give them a competitive edge. So they are essentially, healthcare is being disrupted. Okay. And the question you have to ask yourself is, which healthcare company is positioned to change and to capture this new market? Is it Humana that is pulling out of markets, losing millions of people, versus Clover Health dialing up? I mean, didn't Andrew Toy said it? When they push out, we will pull in. Isn't it happening? So with that, let's go ahead and watch this podcast, which I haven't seen yet, from Andrew. I'm going to put on my headphones so I can listen with it to you guys here. Let me just give me a moment. All right. So let's go ahead and listen. Let's stop the share of the screen so we can share the audio. Like I said, guys, this is a pretty deep. There's a lot of information here. It's a long video. Pre-warned you guys. Lots to talk about. We're doing a deep dive here. We're trying to figure this out together, okay? I see the potential for Clove to hit 200 in 10 years, as you mentioned. But what if we face unexpected events during that time, like a war, pandemic, real estate crash, or any? We are going to see those things. I mean, we could. We don't know, right? I would say, not financial advice. If we see the world collapse over our heads, I would look at the fundamentals. Have they changed? Okay. No, they have not. Stock drops, I buy. I mean, that's the equation I'm using. How would those factors impact Clove trajectory? And do you think the company's fundamentals or strategies could? Yeah, I mean, listen, the stock market doesn't have to open tomorrow. Warren Buffett said that before. Back when 9/11 happened, God forbid, the bid that ever happens again, and bless all of our soldiers, all our firemen that died, and all the people that died on that tragic day. We all have a moment's flashbulb memory of when that happened, and it's unfortunate. The stock market closed a couple days, didn't it? I mean, the stock market doesn't have to open, right? God forbid something happens. So again, you would have to look at the fundamentals, right? Each case brings in a certain problem, right? Right? Can you imagine that if you bought Humana mid 2015 and you've made $1 a profit? No, wait, yeah, exactly. Isn't that crazy? Oh yeah, you're right. Unbelievable. So yeah, let's go back to this podcast here from Andrew, and let's listen to our leader here.
Welcome to the Reverse Mullet Healthcare Podcast from BP2 Health. Today we are at Health, and I'm with my co-host Ellen Brown.
And I'm with my co-host, Justin Politi. We're going to introduce each other today. And we have a guest co-host, Aaron Martin with Fresh RX. Because, we might like food a little bit and think food is part of health. But
we're inserting it here, aren't we?
Super excited for our guest today, Andrew Toy.
Yes.
And we happen to be big fans of what Andrew's doing. And we were lucky enough to grab 15 minutes for a Live at Health edition. So, Andrew, tell us about yourself.
Sure. Yeah. My name's Andrew DeToy. I'm the CEO of Clover Health. We're a Medicare Advantage plan, mainly based out of New Jersey. We only serve Medicare Advantage. So that's the seniors and disabled folks. And we're very, very focused on the early detection and management of chronic disease, a major passion of mine.
Okay. So I don't even think that Justin was with me. So we had lunch with, I won't lose any names here, but we had lunch with, you actually really like what I have to say. So we were having lunch with a virtual primary care organization and one of their founders. I still don't think I'm going to give them away. And we were talking about platforms and we were talking about Medicare Advantage plans. And he brought up that their physicians that they employ love running into the Clover platform because of the information that it brings them.
Oh, that's fantastic.
And I was like, oh my gosh, this is so great because we think it's such an interesting spin on just Medicare Advantage in general. So to hear it from the clinical side,
the virtual guys,
the virtual guys,
yeah, they love it.
He was like, it's such a great tool. Yeah. I thought you would love to hear that.
I love that.
And I didn't intentionally plan that.
I did not plan that either.
Yeah, exactly.
This is the first time I'm hearing about it, and I'm absolutely delighted. That's what we're going for. I think the idea is to actually, I wish it wasn't so unusual, but to be a managed care company who wants to help clinicians manage care.
Wow.
What an idea.
That seems like, I was like, isn't that the job? I thought that's what we were going to do. Yeah, so I'm delighted. Thanks for sharing that. That's awesome.
I thought you would enjoy that. So talk for a minute about your AI assistant and just what you've built.
Tell us more.
Yeah, absolutely.
So he says, talk about our AI systems. You can see how they're prefacing this as an AI system. The tides have changed. Oh, you're an AI company now, right? Before it was like, are you really AI? So you can see how the tides have changed. The branding of Clover has become synonymous with AI. And AI we're in an AI bull run. And just like what Dan Ives was saying, it's 10 p.m. The party is just getting started. And there's going to be an after party at 4 a.m. We're just getting started, guys. We're just getting started, right? And, so that's pretty much there. So, let's continue.
Our whole goal is to serve seniors by empowering their physicians. And so the idea is, instead of having in managed care, it's in vogue right now, you have a lot of care management teams and things like that inside the plan. You guys all know about that.
Oh, yeah.
We don't employ any of those really kind of people. We do have some of our own physicians, but what we do is we build software so that the physicians who are already out there, the primary care physicians, can get access to more data and practice medicine the way they want. And by doing that, they'll do a better job, really. It's as simple as that.
And then you deploy AI as well.
Yeah, so that's behind the scenes. So we don't brand it across there. But I think that my thesis, speaking as a technologist, is AI just makes technology more human. That's its entire job, right? And so behind the scenes, what the AI is doing is sort of anticipating what would be interesting and important for a primary care physician to see.
So this person actually said that that's what their clinicians experience.
Oh, I'm even more pleased.
Described it just like that.
That's what we're going for. Once, I was talking to...
So that's exactly, so you can see here, this is what there's, so, you have someone who's deploying an idea in a product, and she is referencing and saying some physician is saying exactly what you're deploying. So you could see when product meets the customer and it both aligns and fits, that's how you create a flywheel model, right? And I think, again, guys, going back to that market cap, 1.6 billion, and then all of a sudden all the other ones are in the 30s to 80s to hundreds of billions of dollars. We're early in Clover. We're really early. And, there's going to be people that doubt. There's people that, that's fine. Right. Again, it's okay. Right. At the end of the day, we're ultimately going to have the last laugh, and I've seen this play out, and I've never done it publicly before. And now we're going to have a set of lots of videos that are online, and that's ultimately going to be the biggest thing. So, I mean, I'm just very excited, so this is very good. I mean, this is good to you. This is the first time me listening to this. So this is good. I'm very excited. Make sure everything looks good here on the audio side. All right, let's continue.
A payer, and they were like, oh yeah, but how are you going to make physicians do what you want? And I was like, I think the phrasing of your question is just like inherently the wrong thing to say. Like offensive. I mean, I think if you're going to try and make them do it, they're going to not want to do it. I mean, I already don't want to do what you want, and I just heard. So what the AI is doing is positioning. I always say, like, it should feel to a physician like they were doing something that felt really natural, that they were already going to do, even though in our data, we clearly see that they might not have done it. That's where the AI really comes in to smooth over that data, to frame it in a way that is really effective.
I mean, I know with my 15-year-old that the power of suggestion is a lot better than authority. So I think you just made me think of that analogy. I was like, this applies to me as a parent. So
natural behavior.
Yes, exactly.
It sounds so intuitive, but like things are done so differently within managed care plans than that. How did you think of this? Like, how did you come up with this?
So I think about that a lot. I actually don't know the root. It was fairly intuitive to me, and that's not trying to me saying that I'm smarter than everyone else. But I think what probably informs this is I was giving a version of this talk once. I talked about the assistant, and I talked about our approach. And then someone came up at the end. They're like, okay, they're toward me, and they're like, because you're a doctor, right? I was like, no, I'm not a doctor. I'm a computer scientist. And he's like, oh no, you must be a doctor. Like, no one would talk like this. And then I mentioned, and you probably might have seen, but I'm public that I have a condition called Marfan syndrome. It's a congenital condition. It's a connective tissue disorder. It's genetic, so I've had it since I was born. I've been very well managed, but I'm a very high touch. I touch the healthcare system every year. I go in for scans and things like that. And then when I explained that, I think that this particular person was like, no, that's what it is.
Okay.
And you're not a doctor, but because you're so engaged with the healthcare system,
that you see what the problems are.
That's right. He was like, this is not intuitive to most people, because most people just aren't
accessing the way that you are.
By the time they do, they're on Medicare, and I'm looking after them. Basically, on the other side of things.
Well, and the other thing that I figured out is true in our conversations preparing for this is you are in fact an engineer.
I am an engineer.
I have now, yes, and as we have really jumped into this quest of finding the unicorns in healthcare, of people that are really truly doing things differently. What I am blown away with is I think it's probably Justin, 9 out of 10 people are engineers by training that fall into the I'm not joking. It would be an interesting study that when you really look at who is not just doing what you're supposed to do, how you've always done it, but maybe slightly better.
Sure.
Yeah. It's the people that are design and systems thinkers that
you're trained to solve problems.
We started to purposefully stop asking people about people's background until we hear a little bit more, and then we're like, oh, this is really interesting. And then it's like, what do you do?
Engineer.
I was an engineer.
It's amazing. So, all right, I'm going to ask you the big question that we ask everybody. So what do you think can affect real, all caps, change in healthcare?
So many things, so many points.
Yeah, and you have 4 minutes, right?
Yeah. I'll keep the
only one word, actually.
Okay, I'll give you one word.
Oh, wow. Impressive.
So my word is education. But it's probably not the kind of education you might think it's going to be.
Okay.
But it's not clinical education. I can take care of that. I think AI will help a lot with that. The kind of education is, when I think about this, is before I came into Clover, I was the kind of person who I did not even know what an EOB is. And I deliberately say EOB for the listeners who are like, what is an EOB? I'm like, you can check. I can guarantee you have one.
Yeah,
what is an EOB? And you're all laughing because you know exactly what I mean by that.
Yes.
But I was the kind of person where I was like, okay, EOB. And at the top it says, this is not a bill. And I'm like, then why did you send it to me? I don't understand what this is. What do you want me to do with this? And then I would just give it to my wife. I'm like, here you go.
So we talked about this, in terms of low life. If you catch them early, it's actually you can push out the disease. So that's the whole point of Clover, is catching the disease early, because historically people with Marfan syndrome, they find out if someone or a relative has an abdominal unit aneurysm. And for all the doctors that are watching, I'm just a medical student. Correct me if I'm wrong. That's kind of from my understanding, right? Right. So yeah, it's yeah. So my question is then, your daughter's diagnosed with Marfan. How does she figure it out? Someone must have had. I mean, if you're willing to share, right? I'm sorry for that, by the way. Right.
Oh,
that sounds familiar.
You just get this, and you can do what you like with it, right? I didn't understand copays. I certainly didn't understand co-insurance, right? I did like pre-auth, like all those things.
All those horrible words.
All those things. And so, if you think about it, like, what do we normally do when someone doesn't understand really important things? We teach them those important things, right? Like, that's education. But where did you go to learn these things? Like, how many of your friends, I'm sure you guys have these conversations where like, they're like, oh, I don't understand it. I'm like, okay, I got to take you through this. This is how this is going to work.
And then their eyes glaze over very quickly.
That's right. Their eyes glaze over.
It's all great.
That's right. But then you're like, but this is so important. It's so important.
Yeah, you need to be looking at those. Yeah.
You need to be looking at those. Or if you call and they're like, oh, my insurance won't pay for it. And I'm like, no. That's right. The conversation
for an answer.
does not end there, right?
Right.
Like, exactly. Like, where do you even learn that, right? Like, who's teaching you those things? So to me, learning to navigate the healthcare system, now knowing what I know, right? I'm like, okay, ChatGPT is going to write a protest letter, and denying something. Like, we'll take care of this. And so I think that's a really important thing that we could do.
That's really interesting. Okay, so you guys have any more questions? We have 3 additional minutes. Aaron, your eyes just got big. You have a question?
Yeah, I had one and then it just escaped me. Come on, it'll come back. Okay, so yes. So Casey and Kelly Means are on Joe Rogan's podcast, and they were talking about that doctors should be writing a medical necessity letter for people to have for food. For food. And so that way for exercise, and that way their HSAs could pay for that. And I was just interested to see, what do you think about that? Is that something that you've seen happen, or do you think that's something they could be asking their primary care doctors for?
This is why we have the guest co-host, because she comes up with questions that Justin and I would never ask.
So a couple different dimensions there. Like, I don't necessarily think, this is a procedural answer. I don't, as an insurance person, I'm not 100% sure that just because your doctor would write an order for it, that I would necessarily cover it out of the HSA. But I would have to read the statute and the rules around that. I think spiritually, it makes sense. I think the issue that I see when you actually go in there, and we have done a lot of stuff, like if we looked at like food as medicine and all these kinds of things, is that the dimension of this, and this is an innate part of healthcare, is that what people actually, and I'm sure you run into this all the time, what people want to do is not remotely correlated to what is good for them.
Oh,
right?
Sure.
And so where my mind first goes to is the kind of person who already wants to use their HSA dollars to buy food that is good for them.
It's a different person.
It's different.
Right.
Now, could you find someone who wants to use their HSA to buy Doritos?
Oh, I'm sure.
Day long. Can you find someone who wants to use their HSA to buy Doritos? But you see what I'm saying there, right? It's just like, but if you're like, you
have to be a pretty educated consumer to be asking your doctor for that.
That's right.
Absolutely.
That's right. And there's now a massive selection bias around those people who would have that conversation in the first place. And so I'm all for it. I think it's a good idea, but I'm not sure what it cracks the nut on.
I just got an idea that I will leave my idea, and like, it'll be like a mic drop block, is how do you incorporate food education for providers into an AI tool? So like, ICD-9 codes are informing it, medical history is informing it, right? But then it's like, it's not just food. It gets to, does that AI get to a point where it actually helps educate providers on the knowledge gap?
Yes. So I have a very specific view here. But this is a podcast. I'm going to give this is not my official work view, but I'm going to give a podcast view. So I have a personal view that one of the reasons why physicians have a difficult time on food as education is, at the end of the day, we physicians are people too. And I think that there's a certain layer of it where I don't think most physicians necessarily follow all the same rules. In fact, I'm pretty sure that they are. I'm being very generous in that statement. And so it's difficult for them to do it because it's hard to go and talk to somebody about give them advice.
Yeah, when you're
I agree. I agree. I mean, you need to sleep 8 hours a day. You need to relax and drink water. The physicians I work with, sometimes they don't drink water for 9 hours straight because they're in the operating room, sometimes 12 hours straight. The physicians I know, they work and they only they're on call, let's say, and they're up sometimes, 30 hours, right? So yeah, of course, I agree with Andrew here. Yeah, 100%. You don't have to be political. It's the truth.
when you don't follow it yourself,
or even know it,
or know it. So my answer
and you're not trained in it.
So my answer is basically here is that the physician, we can actually just have the AI have the conversation on behalf of the physician, and even if we train them, take them out of that awkward position.
Sure,
it's like that. And then they can be like, look, I think you should have a chat with this nutrition.
Yes.
And then they'll have the nice chat. I'll do all those things, and the physician doesn't have to do that anymore.
I love it. This is such a great. I always like talking to you.
Thank you.
I was really looking forward to having
just a very unique point of
You see the innovation there? There's a lot of we'll talk. Hold on.
view, and like it is
It's
refreshing.
refreshing.
That's the
It's
word.
refreshing.
Great.
Well,
Wonderful.
we wish all the success to Clover Health. We really do. We're excited to see what all you
And
do.
we're excited to see
Thank
the
you.
success that you're realizing. It's well earned.
So thanks for sharing that story. I really.
We're excited to see the success you realize, aka the stock price is going to go to the moon, and all of us we're going to go to Las Vegas and we're going to have the best party of our life, and it's going to be the best party that Calvin Harris is going to be the guest.
It was very good timing. Yeah.
People like it.
Yeah.
Thanks so much, Andrew.
Thank you. Thank you.
All right, so let's go ahead and shout out to these people. Give them a like, give them a follow. God bless their heart. Thank you so much. BP2 Health. God, hopefully if you guys watch this video, maybe you guys can email me and we'll put you on. We'll love to talk. Okay, so let's go ahead and let's stop the share of the screen so we can just share the normal portion of it. All right, so let's take headphones off because there's no point of having them. They always fall off. Okay, let me see. Hello. Okay, good. All right, listen. Like I said, guys, right? Like I said, this is going to be a long live. I mean, we're at 2 hours. Isn't this crazy? 2 hours because there's a lot of things stacked in here, right? So I'm sorry, right? Again, this stuff takes time. Okay, we're going to do the intrinsic value now, right? There's a lot. Okay, but again, this is life-changing money, right? So, right. So, okay, like it's like a no-brainer. It's like a duh. Okay. Okay. So, he said something at the end in terms of innovation regarding talk to this nutrition person. The point here, guys, is, this is very nice because, there's a lot of innovation happening and you think like Humana with their incumbents are going to actually be able to do that. Of course not. They don't have, they're siloed off. They're going to die if they don't change. The question is who can change the fastest? And I think it's Clover because it's so small. It's able to change. And I think they're positioning themselves in this AI revolution. Listen, as the technology regarding large language models gets better, Clover's going to be there to essentially be able to deploy that. Just like they said, anything up to date, it's going to deploy like a Tesla style update to the car. That's essentially where we're headed. Okay. I'm going to say less. I'm just going to let the future, play out. You guys will see what I'm talking about. Okay. So now let's go ahead and let's just see this comment real quick. As a coach, even I get burned out of following up and giving a client comprehensive diet or following up with them on their time off, especially when I know they're not following it. Yeah. I mean, exactly. You could tell. Absolutely. You see it, right? So, all right. So now let's go to the intrinsic value here, okay? And let's just open up a terminal here. Let's open up the help menu. And let's do fundamental analysis. Give me a moment. Let me figure this out. Give me a moment. Sometimes stuff takes time. Sorry. Let me just figure this out. Let me just get the... All right. So let's go ahead Let's zoom in so we can see what the hell we're looking at. Let's look at the annual estimates for Clover, and let's type in Clove, and let's do amount, I don't know, 10. Okay. Again, all part of the stock terminal. Like I said, 2028, we're the only ones that do that. You want to see something that does that, go get a Bloomberg terminal, $2,000 a month, right? Folks that want to get access to our platform, we have our New Year's special. Take advantage, one-time payment, lifetime access. Prices will be increasing. Take advantage of the $700 off coupon code sale. Prices will be going up, and this thing is going to end up going to $5,000 to $6,000, $7,000, okay? Because you'll basically see from our platform, we're not basically this is very expensive to run, okay? This is like a rewarding folks that trust us from the beta access early adopters, because ultimately you can see from our returns, it's not like we're living off of the revenue from here. Anything that gets made from this gets reinvested back into the Al Stock Trades platform stock terminal. So, and then later on, as our picks appreciate, just like we talked about SoundHound and all this other stuff, you'll start basically putting the picture, hopefully before it's too late. So join now if you can. Join the family of lifetime access members. So there's the 2028, but let's just really quickly, let's go to 2024. 2024. And I don't know. Let's call it 3.5. Or you know what? Yeah, let's just take this number here and let's look at this compound annual growth rate here. Let's do the ending. Let's do this by 1. And we can ultimately just take this one. I know it's probably going to be let's do high to high. I'm curious to see, because I know they're not going to have this by this year. It's about a 15% growth rate. That's high to high. I think they're going to return to growth. So I think it's okay to say 3.81. I think it's going to be 3.5. We'll say for right now 3.81. And let's go to the high here, because they are going to return the growth. Go to the high. That's about 18.24%. Now we could go ahead and do 1350. Then this one here. Put 1, we'll calculate that. That's 20%. So I would say let's just use let's use this one here. 1,633.0. That's about 18.24. So let's say they're going to grow 18.24%. I think they could go to 25%. Let's call it 18.24 7. So we will put this there. Or we'll put it on our intrinsic value here. We'll just reload this. We'll put this here. And then we will just kind of zoom out so we can all see this together as a family. So remember when I told you the free cash flow, we calculated it thus far as 118 mil. So we'll just put 108. It was 118.85. So 118.85. We'll go 10. And we know they're growing at 9.33%. We calculated this before. Then we go to outstanding shares. So do that. We go back to our terminal. We go to share float. We type in Clove. We get 501. We'll just put 501. So you get a stock price at 9%, 9.33%. You get a bull case of $5.14. It's currently now trading right between its bear and base. Obviously, this is undervalued, and you can see a lot of the stock price targets for analysts are anywhere between $4 to $6. Right? So this is growing in today's revenue. Now imagine, without changing the free cash flow, Let's put an 18.247 or 18.25 if we take the 7 and round up. By doing that, you get a bull case of $9.84 with a bear case of 523 to a base of 695. Now, what happens if we were to go ahead and we were to elongate this overall free cash flow based off of this trajectory? Well, if we were to fix this, we can have two different methods. We could go ahead and take 49 with 49. Oh, sorry, 44 plus 25. Sorry, we'll add another 44. Or you know what? How about this? We'll take the average of 1 to be a little accurate. So we'll take an average. It's 39.6, and we'll have 49, 44, 25. So we'll take that, and we'll take, 39 plus 49 plus 44 plus 25. You get 157. So we could do 157 here for next year. So you can get $13, right? $13. And that's only 18%, right? Now, what happens if they become 49 all the way? Okay. It becomes, 49, let's say 49 times 4. That's 196. So I can say I'm confident that in the next 2 years, I'm going to see Clover anywhere between $8.63 to $16.23. In 2 years, I'm confident and I'm going to see that. Okay. Based off of this trajectory. Again, not financial advice. I'm not a financial advisor. Take this as a grain of salt, but this is what I'm seeing. Okay. So yeah, that's 18%. Now let's just be humble. And let's say we'll take the average waypoint here and say this is 25, right? Or you know what? Maybe we'll take the average of, we'll just say 39.6. And we'll just turn this into a number. We'll turn this all into numbers. And we'll just say average. This is being humble. That's about 40. So we could take, and we know this is not the case. We could take 39.4 times 4, 157.6. So, right, pretty much same thing, 157.6. If Clover ends up growing, let's say they turn on the growth rate and they start growing, I wouldn't say 68% is a little too high. That's what Oscar is growing at. Let's say we divide that by 2. We grew at, let's say, 34%. Let's say 35%. You see now, $42. Going back to what we had before, $42. $40 stock, right? So, this is going to be fun, right? This is going to be fun. So, lots of money is going to be made. This is very the CFO, Peter, said this is undervalued. It's an undervalued stock. The CFO talked about Benjamin Graham and Warren Buffett. When have you ever seen that? And you've seen me. I was talking about this before. Peter even was a CFO for Clover. So are you starting to see the stars aligning in what we've been saying? Right? So, yeah. So there it is. So that's it. Honestly, that's all I have for you guys, right? That's pretty much everything. That's everything, right? And I want to go back to this. The point that I'm trying to say is that no matter what field you go into, there's always going to be the incumbents. And it's crazy that Honey is okay with taking money from content creators that have affiliate links. It's kind of sad. So it's kind of sad. The parallel I draw from it is just smart money, institutional investors taking away from retail investors. Imagine holding the stock for all this time and selling at 60 cents, 70 cents, or $1. And now you watch it go up. Damn, that must hurt. Actually, I have somebody. I'm not going to say who they are and how they're related or how I know them. How they related to my circle and all this. But the person ended up selling at like $1.10, $1.20. That's very painful. There's going to be people that sell at 5 or 6 or 7 or even 10. And all of a sudden, they jumps to 15, like, oh my God, and it goes back to 10, goes to 15, they sell. And then all of a sudden it explodes to 30, 40, 50, and it's going to be like, man, right? It's just it's the rule of numbers. It's the rule of large numbers. There are going to be people that do that, right? I'm not going to be able to make a lot of the videos like this anymore, in the future. This is a nice little strong video that people can watch. It's a lot. It's a big, long live. Yeah, no, Dr. Pfizer's in the house, right? Yeah, what about Pfizer? I should make a t-shirt. What about Pfizer, man? Oh, thanks for sharing time with us. Merry Christmas, Happy New Year's, everyone. I appreciate all of you guys, right? But our due diligence is going to remain on the research edge. Our due diligence is going to be on the stock terminal. You're starting to see the overall research we're doing, how it removes the emotion and it cleans out the noise from the signal. What I'm trying to do in the stock terminal is I'm just giving you the signal. I'm not trying to give you noise. I don't care about what CNBC says. I don't care what people on Twitter say. I don't care how many followers they have. I look at my research and I have a certain amount of people I look to that are legendary investors, and I look at them, right? And ultimately that guides what I'm looking at. I expect to see increased merger and acquisitions. I expect to see increase in IPOs. I expect to see SpaceX coming online. Space stocks are going to come back, guys. That's why we have a space stock section in our stock terminal, right? So for folks that are interested, join our platform, change your life, okay? This is life-changing information. We have over 2.5 billion outputs of institutionally graded data. Our platform is for the retail investors. It's for people that want to push themselves. It's for people that want more out of life. You deserve everything that this world has to offer. I mean, folks in our stock terminal, you see my lifestyle. It's pretty good. You see it, right? It was never like that before, right? This is the power of what value investing can do for you. So the biggest investment, as Warren Buffett said, is in yourself. Luckily, the difference between a college educational platform and our educational platform is our educational platform is infused with over 2.5 billion outputs of institutionally graded data. So we want to increase the family. We want to make it big. And the whole point of the whole platform is service, right? That's what it's all about. I mean, look, it's Christmas week. What are we doing? Right? It's very clear. Right? We're doing, I said deep. I was deep. Wasn't I? Wasn't kidding. $1,300 a pound black truffle. Oh man. Where's Chamath, right? Love you, Al. This is the best investment ever. There it is. And that's all it is. We're just trying to share it. We're trying to share this knowledge together. And the cool part is we're working together as a family now. We're bouncing ideas on top of each other, right? So what more do you want out of life? I love you guys. Enjoy Christmas. Enjoy Christmas Eve. God is good, right? I'm going to go freeze. I'm going to go jump in a cold plunge. I'm going to go freeze myself, and I'm going to go swim. I'm going to go work out. It's an honor and privilege, guys. You guys have no idea. I'll see you on the next one. God bless you guys. See ya.